Well, good afternoon, everyone. Welcome to the look at the week ahead for the week of 18 to 22 January 2021. Man, I do not know where the time has gone. It's just flown right by. All right. I want to welcome you, let you know a little bit about myself. In case you don't know, I'm an ex-AS Air Force fighter pilot with master's degrees in both computers and business, an active trader since '98, a full-time trader since 2009. I use some fundamentals, but I'm primarily a technical trader. I do moderate H&R candlesticks from time to time, and I provide one-on-one mentoring. Let's put that little laser pointer out there. There are three parts, really, to hit and run candlesticks. There's the main trading room that has been going on for quite a number of years, led by Rick Sadler. Doug Campbell runs the Right Way Options, primarily options focused, one of the best options trading persons that I run across in my 20 plus years of trading, and an exciting and very capable live trading alerts by Mr. Ed Carter. Stick around for some special offers at the end of the presentation. We'll go over the economic calendar and earnings calendar, market overview, and some trade ideas. I do want to remind everybody we're in the heart of earnings season, so please, 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 did I say please? Check before you let the market close if you get into a long or a short or any kind of trade, and make sure you are aware of when earnings is going to occur and if it will possibly change your mind whether you want to hold that position or not over the earnings release. Economic reports for the week. We have Monday as a holiday. Tuesday is pretty much open. Inauguration day on Wednesday. Housing market at 10. Thursday, at 8:30 we have housing starts, jobless claims, and Philly Fed, and then finish up the week on Friday the 22nd. All after the market is open, PMI, existing home sales, and petroleum status report, instead of being on Wednesdays, on Friday. I don't really put a lot of credence in the nat gas report any longer. All right, earnings. This is from Earnings Whispers. Obviously, they show Logitech after the close on Monday. I'm showing it as Tuesday. So they're double check if you're looking to do anything. There's a number of biggies, obviously, Bank of America, Goldman Sachs, and Charles Schwab. We've got Netflix on Tuesday after the close. We have things like Procter & Gamble, United Health, Discover Financial, Fastenal, which people don't know is one of the largest, if not the largest, producer of metal fasteners in the world, let alone the United States. Over here we have on Thursday before the bell we have Union Pacific, and after we have CSX, a couple of transportation companies, Citrix before the bell, Schlumberger on Friday, and that's pretty much it. I am going to go over my list. Now, the earnings calendar here that I've got, I've kind of filtered it out by volume. I've picked out a price greater than $5, so those that are less than that are not showing up. Average daily volume greater than about 400,000. Average to range in the last 14 days would be over a quarter. And I've highlighted in yellow those that are high short interest or relatively high short interest. Again, nothing on Monday. Tuesday, nothing before the bell, but after the close, we've got things like Bank of America and Charles Schwab and Goldman Sachs. And Pets shows up after the close on Tuesday, and it has short interest. So if we get a positive surprise, depending upon what the market was looking at before release, we could get an upside surprise and adding fuel to the fire. All right, I'll go on to the next slide. I'm going to step over to the market overview. to our Thinkorswim account. All right, we'll go here to crude oil. Crude oil has been on a run for a couple of months now, really, since November. Looks like it's doing a little bit of a pullback here, but still in an uptrend, good solid trend upwards. Gold got all the way up to about 1960 and then it's pulled back fairly sharply here in the last couple of weeks. Let's look at the S&P 500. Friday's a little bit of a sell-off. I'm wondering if there's a lot of uncertainty going on there about a number of things, mostly political. But I'm just going to watch the charts and don't worry about the rest. We are still in an uptrend. However, if we close below this 3740 or something like that, I'll be looking for us to maybe go around to 3680. We go to below 3680, that'll be basically beating the rising 50-day simple moving average. If we can't hold that, then we will have a sea change probably. Okay, at least in my opinion. The Dow, pretty much the same as the S&P. 30,000 on the Dow would be my line in the sand there. The NASDAQ, it's kind of like what we see in the S&P and the Dow, but not exactly. We're still holding pretty darn close to my 17 exponential. The trend is starting to weaken a bit though, and I would think anything from 12.6 and above, we're okay, and that'll be basically the rising 50. Russell's hung in there a little bit better than the rest of the market, and that's actually to be expected if we're doing any better on vaccinations for COVID and opening up restaurants and other businesses. I'm looking for a possible pullback to the mid 20s, maybe 2050-ish, something like that. But definitely don't want to see it get below 2,000. That would be definitely bearish. The VIX, we're still in kind of this range bound from about 26 to 27 down to about 21. I don't see that much happening unless we get above the 27 area, and then we could pop ourselves up to the 30. We could get spikes there, but I'm basically looking at the bodies. All right, I'm going to look at the U.S. 10-year. The U.S. 10-year shot up quite a bit. I'm not sure exactly what's going on here because the U.S. government and governments throughout the world are not going to be able to allow interest rates to rise. Now, that's a fundamental view and not a technical view. But if they allow them to rise, they won't be able to service their debt. So the only way for them to keep themselves alive and keep printing money is to keep interest rates low. So I think this is probably a temporary blip. Maybe 10% would be 1% 10 on this indicator would be the going rate that I expect going forward. Okay, let's go over here. Let's look at the trade ideas, and let me go on over to TC2000. Where are you hiding? There you are. All right, before I want to go over any of the longs and shorts, I want to finish up on the markets with T2122, the 4-week new high, new low ratio. My pullback zone, we were in it for quite some time, and now we're pulling back towards the 50th percentile, and the bounce zone's obviously down here. When we get into pullback zones, we do tend to, within a few days, we can stay in there for a few days, but when we get down to the bounce zone, it pretty much doesn't stay there for very long at all. It's like a repellent. You can see how over the last month and a bit, maybe 6 weeks, maybe 2 months now, I guess we have been in this pullback zone, and we dipped down below it. We stayed from November to mid-December. We stayed in it, and then we got some pretty healthy or unhealthy dips there. But by and large, we're going higher. Let me turn this over to a daily and go over the longs that I've got. I'm looking at ALEC. It's a biotech. I say to go over to the weeklies, go do that. And you can see how possibly 21, if we can continue to go higher. My stochastics RSI is curling up. I believe 21 to 22 or so would be in the cards. CVM, another biotech, probably popping $1.50 to 16. Somebody said, well, Steve, there's not much. It's only $1.50. Well, $1.50 on 15 is 10%. So I can take 10% here and there. It adds up to real money after a while. GameStop reported some high fourth quarter sales from last year. Popped up on that. Either of two things can happen. Either we could consolidate up here at the top, and that would be very bullish. And let's see what we got here. Get my drawing tools. You know, if we consolidate in this area here and then move up and do a breakout, that'll be basically a continuation pattern, which is a 1, 2, 3 move, with 1 being the wide range bar up, this one here, in the next couple of days. The sideways bars can be 1, 2, 3, 4, 5 days. I don't really care. That really makes it set up for high and tight consolidation or a pop out of the box. Now, the other option for us, bullish-wise, would be for us to pull back a little bit more, hopefully stay above this 50th percentile, and then start back up. If that's the case, I go long with a just over the bottom with under this pullback as my stop, and my first target will be basically the swing highs, and then let the other one ride. So either a J hook or a 1, 2, 3 continuation move is my setup there. Illumina 385. I believe that this is all-time highs. Yes, the 385 area is all-time high. And looking for it. It popped up there, couldn't hold it, but I'm looking for a move above 385 and a half as a possible long. KB Homes, we've been up a couple of times to this 3775 area. Looks like we're doing kind of a bull flag pennant. If we can get back up there and break up, we're probably up to 41 and a quarter. Merck, been up to this $85 level twice. You can call it 3 times if you're 83.50. But we had a bullish engulf on Friday. Stochastics RSI's curling up. With market help, I think Merck could go to 85 or potentially higher if we get over the 85, 86. Maybe 91's in the cards. Next one's Novavax. We're doing a pop out of the box, just consolidation here. Up on huge volume. Big move from 90 to 140. It's trying to digest that move, guys. That's all it is. We're going to break out probably to the upside at some point, and I'd like to be a party to that one. 130 to 150 is 20. If you use options, it could leverage it quite a bit and potentially reduce your risk there and definitely your capital involved. Let's go look at the area chart. This 160, then you get higher, but I'm not going to cross that bridge yet. But primarily looking for the pop out of the box to about this 150 area. Next one's Run. Run did a move above 80, the prior swing high. It looks like it's coming back down to there. It is not ready yet. Don't anticipate the move. Make this one. Let's do this. Let me get the right color here. Color red. Let's say that this one pulls back here and then maybe goes sideways for a couple of days. Well, then let's look what happens if it actually, get the color here, it starts to move up. I suspect that we'll go back up to this level here, and anything above either this level here or this kind of $90 level would really be a confirmation. I don't wait for confirmation. Well, I wait for it to curl back up. I wait for it to give me a signal. I do not anticipate that. But what I'm meaning is I don't wait and wait and wait and go long over about 90 to 91. What I've basically given up is all this in here as potential profit. And my stop still really needs to be down here at 80. So I try to minimize the distance between where I enter and where my stop, where it proves me wrong. So that's My experience is that we need to get in as early as possible, but not too early. One of the things that's a little disturbing is that there was a bit of a sell-off here. Volume picked up on Friday, so let's make this thing curl back up. But I will probably go long this puppy on the first sign of moving back up on the daily or 4 hour chart. Tenet Healthcare, 47.75. Yep, this is probably heading up into the 50s. We're now up here. It looks like we only pulled back to the 50% level on my stochastics RSI, and that is very bullish. We basically digested, let's see what here, screen draw. We basically are digesting the move that we had here. That move up right there is being digested over there, and we did basically a pop out of the box. And the 47.75 is just from the most recent. I did not discover it. Would have been hard pressed to go long with the stochastics RSI that high, but it looks like it's starting to curl back up. And if we can get a breakout here, the mid 50s is possible, totally possible. Washington Federal reported earnings last week, I believe, and they are forming a pennant here. So anything near a breakout here of 28.5 to 29, with a stop below to the recent lows around 27.5. Now, where could we possibly be going? Well, 29 to 30, and then above that, you've got to get all the way up into this area in the mid 30s. So WAFD's probably doing something right. WVE, Wave Life Sciences, another biotech. It says look left. I am going to look left. And sure enough, this $11 area, we break through that. We are in a gap here, which has no resistance whatsoever. So this right in here would be a gap fill. And the potential is for us to run all the way up to the $20 area as well. Now we came zooming down from the 20s. I don't see that as being a straight line by any stretch of the imagination, but I'm thinking maybe we get up here to 11, we may pause for a couple of days and then zigzag our way up in towards this $15 level. All right, let's keep an eye on the stochastics RSI. That plus the setup here is what got me to looking at it. Last one on the long list is ZYXI. ZYXI was there last week, and I did say be patient. Let it make a move over 17 or pull back here. $19 to $20 are our possible targets. Let's draw this puppy right in here. That would be my ultimate target here. A couple of bucks on 17 would, you're talking over 10%, and I'll take it. All right, let's go on over to the shorts. Now, Friday was the kickoff of earnings season in earnest, and the big banks supposedly reported as beats. But obviously it wasn't good enough. People were expecting more. I'm thinking a pullback here to 60 to 61 is in the cards, and then let's see what happens. But as a short, I would love to see this one bounce up and then curl back down and go back and test the 60 to 61. Then I could have a tight stop somewhere above the curl back. Yeah, I'm really messing that one up. I went off the edge of my mouse pad. Okay, so I think that's really the target that we're looking at. I'd like to have more room, more reward than I currently have. So a bounce is probably going to have to happen for me before I could actually enter a short. One that's really set up right now very nicely is FedEx. So FedEx below about 250.5 to 250 is setting up a run to about the 241 level. Let me mark that one up for us here. So that would be the target. It doesn't look like a whole lot on the chart, but I swear if you look at it from an options perspective for maybe only about 2 or 3 days holding, that could be pretty nice. And that does just assume, though, that it actually stops there and doesn't continue going lower. INSM, INSM, first target would be 30.75. Actually, the first checkpoint would be around 32.75, but my target would be 30.75, and then potentially 27.75. One of the few biotechs that has not been working out that well. Another bank, PNC, break below this level, we probably at that 150, 53 level or so. We're probably heading into the high 140s. Kind of hard to tell where it's going to go. Lots of volume on the sell-off. Be a little careful. We're still in an uptrend overall. So be careful with shorts. You're really bucking the trend if you do that. Progress, I've already got identified what I'd like to have. I have to have a bounce before going short. But if we bounce, we can go short with a checkpoint of about 44.25 where we are right now. And the targets would be all the way down here to 41.50. Let's mark that puppy up. Probably somebody in that area right there. Okay. Rocket, I think that's Rocket Mortgage. This is kind of just flipping around. What got me interested in this is the inverted J hook trying to form in stochastics RSI, curling, rolling over. The possibility to get down to 18. This one I would not be using options. I'd be using straight stock. And again, not a total perfect setup, but it did what we are really expecting to do for our shorts, where we had move down, bounce to the trend line, reverse to the mean, move down, reverse to the mean. We're going to do another move down. It's possible. UPS along with FedEx, both looking a little weak. FedEx is right here at the short level. Again, I'd really like to see a bounce first, somewhere into this area right in here, and then a move back, hopefully going into the mid 150s. Final short is Wells Fargo. Wells Fargo set up with this gap here. If we open lower on Tuesday, the new Monday for us, we're possibly heading down here into this box area, about 30 to a little bit lower. High volume on the sell-off. Not a classic, but again, if we get a bounce on Tuesday and then go roll over, that would probably be the best for us. Okay, let's go back to our presentation. All right, I want to point out that we have 30-day trials on either hit and run candlesticks or right way options. You can do both, but either one is only 30 days for $49. A really sweet deal as far as I'm concerned. You could help me out if you were going to do a trial offer by using the links here, because they give me a very small stipend if you actually sign up using that link. I'd like to also point out we use the live trading alerts. There is a 14-day free trial offer. Again, use this link and you'll help me out. It is basically professional scanning and alerting software for the retail guy. There are a lot of them out there that, cost 2 and 3 times what Ed is charging for this puppy, and frankly don't do as well or do as much as this live LTA scanner does. It allows us to scan the market or our own little subset of the market, what I call a universe, and we can find exactly the right trade setups at exactly the right time, and we don't miss them. If you want to find out more about it, go to livetradingalerts.com. Again, remember to sign up if you're going to sign up for the free trial or sign up for a paid subscription. Use my link here. I appreciate that a lot. Okay, if anybody wants to follow me, I post a lot during the week on Stock Twits at Top Gun Trading. I post this video and a few others for special content on my YouTube channel. And if you have any questions, you're interested in maybe mentoring or something like that, put mentoring or coaching in the subject and send me an email to topguntrading2@gmail.com, and I'll respond to you as soon as I can. If I don't respond within 24 hours, it's because I haven't seen it. It's not because I'm ignoring you. All right. That pretty much does it for this week's look at the week ahead. I want to thank everybody again for being here, and be smart. The market's in a little bit of a pullback mode, but we still are at an uptrend. Do not be so anxious to try to go short. That's really the bottom line that I'm going to leave you with. All right, take care. See you next week.